Good day everyone, Adrian Jones here. Welcome to my video. This is a preview of the market ahead for the week, starting 14 November. And here at Tradeology, I'm super excited to get going with this for you. This is not going to be a long video, but I just want to give you some insights into the up and coming news events and the few important pairs that we're going to be looking at during the course of this preview. So firstly, I'm having a look, as I normally do, at the market, the news ahead for the markets, and one can use many calendars to do this, the economic fundamental calendars, and I'm just happening this time to be using one from TradingView. You might have your own source of these, and just as an example, using this, we're looking at the red flames here, so to speak. These are the high impact news releases, and each would affect the relevant currency pair to a large extent. So one in Australia, the RBA meeting minutes coming out on the 15th of November, for example, that could affect the Australian dollar, of course, and all the pairs related to that. The United Kingdom, same, that could affect the pound. So these are the key dates that we're looking at and times. These are pre-scheduled, so we know they're coming up. And one of the most important coming up this week is actually going to be the retail sales data coming out of the US on November 16th. That's just a couple of days from now. And well, the expectation here is that the retail sales are going to be quite good, and that would strengthen the dollar. Now, currently, what's been happening has been that over the last while, the Federal Reserve, has been setting interest rates based on high inflation. They're trying to get inflation under control in the US, and the basis points, the increase in the interest rates has been around 75 basis points for a while, and it's been expected that that would continue into their next rate decision in December. That sentiment has now changed. The CPI index data released during the course of the previous week has actually shown that inflation has slowed to a certain extent. So that means that the Fed's policy, very aggressive or hawkish policy, has had an effect, which is good news. So it's slowing down a bit, and the expectation now is for their next increase, they will likely do an increase of around 50 basis points. Now, what that has led to has been actually, for the rest of the world, when looking at it from the rest of the world's perspective, that's been a good thing. It's led to the weakening of the US dollar over the course of the last few days, and the strengthening of the other currencies, such as the euro and the pound, and we'll go into those in just a moment. Now, when the retail figures come out and show again that the retail sales have increased, they've been good, which I'm expecting they will be, then that shows further evidence that the Fed's starting to get inflation under control, and we're starting to see some more consumer confidence coming through. So from the fundamental point of view, that's what's happening. We're seeing inflation slightly, some indications, early signs that inflation is getting under control, or at least that the Fed's getting it under control. There are other news releases throughout the week. Now, the importance here is that when trading a pair related to the particular news event, such as those coming out of the US or Japan or the UK, one should avoid trading. As a technical trader, you'd avoid trading at least half an hour before, after, and after the news releases, because the market can behave in very unpredictable fashion during this time, and we want to avoid that. So just to be aware of these dates, I'd always go through them, check the week ahead so that you plan in advance what's expected to happen. Now, some other news that's been interesting that's come out this week, unrelated really to the Forex side, but I just do want to mention it, and I'm not going to cover it in great detail here, is the cryptocurrency world. And we've seen cryptocurrency exchange FTX basically go under this last week, a huge exchange. And they had actually lent depositors funds to a sister company called Almeida, and that had also tanked as a result. Binance tried to come in and rescue them, and then pulled out when they weren't happy. When it turned out that they weren't happy with the data that they were looking at, they decided to pull out. And now what's going to likely occur is that the regulatory authorities are going to move in. They're going to move in, and we're going to see a lot of talk about this over the course of the next week. It's been big news. It did see Bitcoin go down as low as around 16,000 US dollars per Bitcoin. It's slight at the time of making this on a Sunday. As I preview the markets, it's around 16,500 US dollars. In the longer term, though, I see a lot of pressure on Bitcoin, and I see a lot of volatility this week. I'm going to stay out of trading the markets for this particular week. If, though, I were to, as far as the crypto side is concerned, I'd be very bearish on this. I do believe that the next key level is going to be around the $15,000 level. Should a breakthrough there, then around $14,500. It seems to have stabilized over the last day or two, though. I think everyone's kind of trying to understand what's happened over the course of the last few days, but there's definitely downward pressure across the board with cryptocurrencies at the moment. Well, as Forex traders, we are fortunate that we have other opportunities also. And so let's have a look at the Forex side of things right now. And I'm going to cover just a few of the pairs that I covered last week, the pound USD, Euro USD, gold. Let's have a look at those and the Australian dollar and see what's likely to happen. So at the moment, I'm on the pound USD. This is a 4-hour chart. And let's see how this is looking, right? So the pound here, as you can see, I know there's a lot of levels here. It looks very complicated. It's not really. All I've done is I put on the chart here some key levels based on support, resistance levels, major, minor, that one can easily identify on the chart. And also I have a system here, one of our Tradeology systems, with the moving average, the blue line here, the 18 moving average, the red line here being the 16 moving average, a MACD indicator here, with certain settings and so on. But you could be using your own system. This is just to give an indication to you of whether the market is looking bullish or bearish, and what I'm particularly looking for when I'm looking at the chart. So on the higher time frames, of course, if one's trading low time frame, you want to hop up to the higher time frames and see. You go to the daily. I'm just so on the 4-hour at the moment, and we can see over the course of the last couple of weeks, trading has been in the channel, an upwardly moving channel, a series of higher lows and higher highs, and eventually around the end of last week, the price did break through this particular level here at 1.17, and has also gone through this upper channel line here, and has closed above that. Now, the next key level that I'm looking at here is the 1.19 level, and once it breaks through there, the key one that everyone is looking for is at the £1.20 level, and that could potentially play out in the next few days, especially before the retail sales figures come out. Now, the pound is under a lot of pressure for various reasons, right? From the fundamental point of view. But here what we're seeing is a rise in the pound strength, not necessarily because of the pound itself having a lot of bullish momentum, etc. This is more a outcome of a weak dollar. So the dollar's weak, and that's given the pound strength. As soon as the dollar gains strength again, expect the pound to lose strength. And as I mentioned earlier, I am looking towards those key that key data that's coming out early in the week, the retail sales figures, where I am expecting that the dollar will gain strength there. So just for a couple of days at least, I'm expecting that the pound Monday, Tuesday would gain some strength. All the indicators here certainly seem to look very bullish, and it looks set to break up to this level, 1.19 level. Should it break through there, then it's heading up towards the £1.20 level there. And I think there it's going to get some resistance. If it gets there before the news data comes out, all the better. But I'd first be waiting for it to break above this level and then setting my take profit targets just below this 1.2 level here, at least for the first couple of days. But keep an eye on your charts. Things can change quite quickly, as we know. Let's move on to another chart here, the EURUSD. Here we can see a massive increase over the course of the latter part of last week, especially Friday. Again, price was moving along a series of higher highs, higher lows, and broke through the channel and then broke through two very important levels. In quick succession, that was the 1.02 level here, and also another level here at around 1.2028, and now is just sitting at the cusp of breaking through another level, 1.036 or thereabouts. And should it come through that on Monday, which I fully expect that it will, the all the indicators here, also for our chart, are showing very bullish at this point. I do expect then that it will increase towards the next level, which I've set over here. You can see that that would have been a level set way back in June, 1.045 or thereabouts, right? So I'll be looking towards heading up bullish, setting my take profit targets just below that level there. And should it continue to break through that, I do expect some consolidation, again, for the same reasons, the retail figures. Then we could even see it going higher to 1.06. Overall, very bullish on this pair in the longer run. I can see no reason why at this stage, until we get the next retail sales data out, that that we shouldn't see a strengthening of the euro as the dollar weakens until there's a reverse in that. All right. Now I just want to move some other things out the way here, if I can. Well, up on my screen. All right. So now we're off to the Australian dollar, US dollar. Here again, we can see a series of higher lows and higher highs. In fact, I could draw a channel there as well, starting to form, or it started to form a bit of a wedge there. But in any case, the price has broken through a couple of key levels here. Also later last week, for the same reasons as before, weakening of the dollar, and we can see that it's heading up towards this next key level here. And I do predict it's going to hit this level around Monday when the market's open, 0.675 or thereabouts. If it breaks through that level, there's a potential for upside movement towards this level here, 0.68 or so over the next day or two. But then again, for the same reason as given before, I'd expect the dollar to strengthen somewhat around the time of the retail sales data coming out of America, and then some consolidation to occur, and it would then likely trade within the range of these here if it doesn't dip below that. Now, the key thing to bear in mind as far as Australian dollar is concerned is that although in America the CPI is under control, it seems to be at least moving down, and the Fed seems to be grappling with it. It seems to be effective with its rising of the interest rates has eventually shown signs of some improvement, that they're getting things under control, that it might not be as bad as one expected, but there's still some trying times ahead, no doubt. In Australia, what they're finding is there's an increase still in CPI. It's not under control. The RBA, the Reserve Bank of Australia, is also very slow. It seems to be very slow at tackling the increases that are needed in the interest rate. So that's likely to drag things out a little bit in Australia. And on top of that, there was an expectation that because China, which is one of its biggest trading partners, which has been basically locked to the world, less production, mainly due to COVID shutdowns and so on. China seems to have eased up their policy somewhat, but there's no signs really at this point that that's going to lead to an opening up of China. It seems to be happening very slowly, and that, of course, is not a good thing for the Australian dollar. So I'm feeling a bit neutral. I've got a neutral outlook for the Australian dollar over the short to medium term, as far as that's concerned. So we might see a spike in prices, and I do expect that, or some opportunities here, bullish for a couple of days. After that, I'm expecting it not to continue along, in an upward trajectory. It's more likely to move in a range-bound market for the next while in the short to medium term. Not too optimistic there for that. Now, gold has had a major gain over the last few days. Whenever the US dollar weakens, people run to gold and for security, right? So, as I mentioned before, the US dollar has been weakening over the last latter part of the last week, and this, of course, has led to the bulls being quite happy with that, going into buying gold, and have broken through some key levels also during the last day or so of the week last week. So it's hit this level here at $1,720. Another level, key level around 1,760. It's heading up towards 1,780, which I think it will reach in the next day. And then should it break through that, then the next key level is the $1,800 level. That would be a key level, a major resistance level there, coming up again. As long as the dollar is on the back foot, gold should be moving up. So for at least the first day or so of the new week, I'm going to be bullish on gold. I'm going to be setting my first target there. And then I'd be very carefully monitoring gold, setting it around the 1,795 level. Attack profit target there is a potential, but still monitoring gold for the latter part of Monday and Tuesday until the retail sales figures come out from the US, at which time, as I expect, the dollar could gain some strength and gold could then weaken. At which stage I will then have a relook at the charts. Of course, I'm analyzing them every day, but I'll basically be looking very tightly at the charts to monitor what happens during the next few days. But for now, bullish on gold, neutral on the Australian dollar, bullish on the euro, bullish on the pound, at least for a day or so. And we'll see how it goes. I'm going to stay out of crypto for the next few days. And I wish you all a great trading week ahead. Please do subscribe to our channel below if you haven't yet done that, so that you can get the notification of whenever we do release a new video. And there's a lot of other videos on various of our channels. Please do go check them out. So click that button below. And then also you will see in our description some very interesting links where you can get free systems and some excellent other systems that you would certainly want to learn more about. Please go and have a look right now below. And I look forward to seeing you in one of my next videos. Thank you, guys. Good trading week ahead. Cheers. Thanks again for watching, and please remember to subscribe to our channel below to receive notifications, so whenever a new video is released, you don't miss any. And again, for a free system, also check out our link in that description below.